Hello, everybody. Bryan Bibbo here, president of J.L. Smith Holistic Wealth Management. We want to reflect back and look at, how the markets have performed in 2024, and then what we can expect going into the first quarter of 2025. But again, I want to reflect on the success of 2024. We had inflation returning to typical levels, a robust economy growth, lower interest rates, and markets achieving all-time highs. These are reminders of the importance of staying invested during uncertain times for long-term benefits. Now, 2025, there's a potential for continued market strength. A lot of analysts are shifting their forecast to being optimistic. Consumer spending, if that continues to go, we'll see some positivities in the market. Business investment, economic growth are going to be the key drivers of what we want to see happen in 2025. Now, there are some challenges to think of: elevated market valuation. So the company's PE ratios, price per earnings, are at records high in 2024. So there's always a potential for correction if on those companies, the earnings or the expectations of their growth fall short. Now, there's some uncertainty around inflation, what the Federal Reserve is going to do, when they're going to lower interest rates, or are they going to lower interest? And, we have a new administration in office. What do those priorities look like? But let's recap 2024 and the performance. The S&P 500 rose approximately 25%, and then following a gain of over 26% in 2023. From the historical perspective, when we look at instances where we have back-to-back 20-plus year gains, and we're looking since 1950, the third year historically has averaged a return of 12.3%. With a few exceptions to that rule. There's like two instances where the market actually went down, but to our point, the average on the third year after 20% back-to-back gains has averaged 12.3%. So there is some continued optimism for economic and earnings growth in 2025. Now, policies can impact, and there's some market tailwinds right there. When we saw the new president being elected, there was some positive reactions in the stock market in 2024. And there's some optimism also around the potential tax cuts and deregulations for individuals just like you and I, and then also businesses too. And there is a pro-market stance with this new administration. How they determine, and one of their benchmarks to measure how they've done while they're in office, is how the stock market is going to perform while they're in office. So that's kind of a pro stance there. But there are some key tailwinds we need to be prepared for in 2025. Are we going to extend the Tax Cuts and Jobs Act? What about deregulation of reducing compliance costs and boosting profitability? Those could be some positive things, but there's some risks to consider. A lot of things we hear in the news: tariffs, trade tensions, large-scale immigration policies, and increased national debt. Inflationary potential limiting the Federal Reserve rate cuts. If we continue to see some of this inflation happening, well, guess what? It might not have the rate cuts we were expecting because the Federal Reserve will kind of be a little bit handcuffed of what they can do. Technology and diversification. There's innovation driving market strength, especially in technology. A lot of the things we hear about is the AI boom, and there's some differences from the 2000s and the tech bubble. Current valuations in these technology stocks are supported by strong cash flow and earnings, where in the tech bubble, even if the company had a .com name, people were just buying that stock, even though they didn't have the earnings or the valuations to support it. So we want to make sure we're diversified across the board. Performance differences across all asset classes: small cap, mid cap, international, large cap. But the lessons we can learn from the year 2000 to 2009, which is considered the lost decade for the S&P 500, We need to just learn from there, and we just need to understand a long-term strategy. We need to emphasize having a balanced investment plan, because from that 2000 to 2009, the S&P, which is primarily large cap stocks, didn't fare too well. As I said before, it's considered the lost decade. So we want to make sure we're using your bucket plan to address short-term and long-term needs. Ensure now and soon buckets are adequately funded to manage volatility and make sure we keep up with your standard of living. The last thing we want to see you do is losing your purchasing power over time and increasing those distributions with inflation as costs rise. The last things I want to talk about is I encourage you to reach out with any questions or anything in your financial plan that you want to address. Anytime there's uncertainty in your minds, we are always a phone call, email away to be able to help you. I want to thank you for your continued trust and your partnership. We look forward to the next quarter and many years to come with each and every one of you. Thanks. Have a blessed day.